Good evening, everyone. We would like to welcome you all to the 5th of 7 expert panel discussions for TADS Awards, the world's first annual tokenized international awards for tokenized assets and digitized securities. Now, today's topic will be on secondary market and liquidity in the TADS sector. We have another 2 sessions after this one, as shown on the screen, so feel free to join us. They will be covering other key topics shown, so feel free to scan the QR code on the upper right corner to register, and if you have any questions, please do not hesitate to reach out. Now, I'd like to give a quick rundown of today's events, as you can see on the screen. Now, before we go into the exciting part of today's session, which is the expert panel discussion, which will be led by Albert, Sam Lee, Chairman of Steering Committee of the TADS Awards, and also founder and CEO of CoinStreet Partners, will start off with a quick information session. Now, today, unfortunately, Sam cannot join us physically here. So we're going to have a video of him taking us through TADS Awards 2021 and the logistics regarding that. And followed by that, we're going to have our panel discussion. So that being said, let's still give a warm virtual welcome to Sam, who we'll be seeing through video today. All right, I'll pass it over to the committee.
Thank you for the kind introduction. My name is Sam Lee. I'm the chairman of the steering committee of TADS Awards 2021. I'm also the founder and CEO of CoinStreet Partners. Today is my great pleasure to be here to share with you on some information on TADS Awards 2021. TADS Awards is the world's first annual international awards for tokenized asset and digitized securities sector. It celebrates this industry by recognizing and honoring significant contribution and distinguished achievement worldwide. It brings together individuals and businesses to share the energy and tokenization that brings to the financial sector. It nurtured the growth of this specific industry by jointly establishing best practices and setting measuring standards for high-quality tokenized asset and digitized securities, together with other industry leaders on the global markets. We are very grateful to host the second year of TADS Awards this year in 2021. We launched the first year of TADS Awards last year in 2020. These are the 10 winners from last year. And among them, we have some very reputable companies and impressive project as well. You can find the details on our website. For this year, TADS Awards 2021, we follow the same structure as last year to separate the awards into 2 categories. As you can see in the left-hand side, what we call the Best of Class TADS Awards category, it goes to the asset issuers and corporations. And on the right-hand side, the Ecosystem Excellency Awards category, it goes to the service provider and solution providers along the value chain. And underneath each category, we have some subcategory of different awards. For example, on the Best of TADS Awards category, we have 5 sub-awards underneath, namely the equity-backed tokens, which is backed by equity shares of a company, asset-backed tokens, which is backed by physical asset, other assets, or even fiat currency as well. For example, we consider stable coin is also asset-backed tokens. The third type will be tokenized debt, which will be backed by debts, bonds, and debentures. And this year, following the trend, we added the NFT token as well. The NFT token, we focus more on the security nature of NFT, because there are other type of NFT that is not classified as securities. But there are some that have more of an investment element, which can also be classified as security as well. In addition, we have the ESG, SDG tokens, and also adding a new category, subcategory this year is the TADS Rising Star Awards for the best of class TADS category. On the right-hand side, ecosystem excellency, the subcategory includes KYC compliance solution, tokens issuing solution, digital custodian solution, and also this year we adding NFT platform solution and brokerage asset management solution, as well as a new subcategory rewarding the up and coming companies under the Rising Star Award. And as you can imagine, these two type of categories, best of class TADS and ecosystem excellency awards, they are targeting to different groups of companies. So therefore, we also have different judging criteria at the back. For example, for the best of class TADS awards, we judge the project by the economic viability, innovation, risk management, governance, and compliance. On the other hand, for ecosystem excellency, we judge it by ingenuity, impact, practicality, compliance, and cost efficiency. And you might notice there's one element is common for the two categories is compliance, because we think tokenized asset and digitized securities are regulated products. We believe both on the tokens financial product side and also the technical solution side should also be a compliance solution. We already start the nomination. It will run until end of September, and we are aiming to have an award ceremony in early November as a side event of Hong Kong FinTech Week. These are some of our steering committees, our organizing committee. We have a separate vetting and judging committee for each category of awards. So these are the vetting and judging committees for best of class TADS awards category. And these are the vetting and judging committee for the ecosystem excellency awards category. Also, thank you for the strong support for our strategic partners, supporting organizations, sponsors, and research and legal partners. And of course, our regulated exchange partners around the world, and PR and media and community partners as well. Thanks to the strong support from the community, we have a very good coverage on the media side in multiple language and different countries. So this is the timeline. As you can see now, we are in the middle of the expert discussion panel sessions. This is, I believe, the 5th session. So we still have 2 more to go. And then we will be heading to the end of our nomination period in end of September. We're aiming to complete the judging in October so that we can make the announcement of results in early November during the award ceremony. These are some of the dates of the rest of the expert discussion panel. So without further delay, I will pass the session back to the host to continue the very exciting expert panel discussion coming up next. Thank you so much.
All right. Thank you so much to Sam. Even though he's not here with us live, still, if you have any questions, please do not hesitate to ask him. Now, on to the exciting part of today's sort of session. We have here our 5th sort of panel discussion on secondary market liquidity. So before we jump right into it, I'd like to do a really quick introduction of our panel today. So first of all, we have our moderator, Albert Yep, who's the chairman of Syndicate Capital Group. He'll be moderating our session today. Next, we have Nick Cohen, who is the Group Chief Executive Officer of GSX Group. Next, we have Branson Lee, who's the CEO of ECXS.com. And then next after that, we have Eric Neo, who's the president of HG Exchange. And last but not least, we have Dr. Anthony Ng here, who is the CEO and co-founder of Hong Kong Virtual Asset Exchange Limited. So now I'm going to pass the mic over to Albert, who's going to take us through today's discussion.
Well, again, thank you to Sam and Sandy. Good morning and good evening, everyone. I know many of you are joining from different time zones, so thank you for attending our Expert Panel 5 for the topic of secondary market and liquidity in tax. I'm Albert Yip, the moderator of Tax Award for this panel. I'm also the chairman of Syndicate Capital Group, the chairman of Wealth Tax Committee of IFTA in Hong Kong. As mentioned by Sam, it is a great panel tonight. I have all these top guys from different exchanges across the world to be our panelists. It's my great honor to be the moderator here. So why not introduce our panelists once more? Well, we have Nick Cohen, the group CEO of the GS Exchange. We have Mr. Branson Lee, CEO, EasyAsix.com. We have Mr. Eric Neo, President, HG Exchange, and also Dr. Anthony Wong, the CEO and co-founder of Hong Kong Virtual Assets Exchange. So please help me to welcome everyone of you joining this panel. So to kickstart, I would like to table my first questions here, which is also raised by many of participants offline to me before we get started of this panel. The first half of 2021 is an interesting period of, to the market of tax to different exchange on a worldwide basis. So what are the outlooks for the secondary markets for Q4 2021 and 2022? I would like to seek some of the views and insights from different top guys of the exchange over here. So Nick, you mind to be the first one to share your insights, Nick?
Not at all. Thank you very much, Albert. It's all downhill from here if I'm starting the talk, guys. So I apologize in advance. I think
definitely you are.
I think it's been. I mean, look, if you look at this year already, I think my colleagues would agree. I think we saw a pretty interesting event in a traditional exchange. I'm talking about GameStop and Robinhood, where we saw, I think, probably for the first time, a sort of public event where probably people didn't realize that brokers act as principals, and there are these things called clearers who can change the rules in a day and ask for a couple of billion of extra capital. And I think that, first of all, there was a group of people who got shut out of the market. And I think secondly, there was a potential systemic risk in the system where Robinhood were able to meet that capital call. But it kind of underlines one of what we see as one of the key drivers as to why this train is getting faster and faster as we look at digital securities. If you look at the current, what we call T+2 model, it works until it doesn't. And I think whether it's counterparty risk or whether it's the high number of failed trades or whether it's capital being posted with clearers, whether it's the cost of the life cycle of the trade, I think there's probably been no year bigger than this year where we've starting to actually see, okay, regulators are now starting to issue licenses. Companies such as my colleagues here are actually starting to open exchanges. And I know, I bet my colleagues can relate to the fact that it is a long journey, this journey, but we're now starting, I think, to see a real change. So I see 2022, and I hope I'm in this club where we will actually start to get licenses and open and see a dynamic growing ecosystem for digital assets. I see a huge change coming.
No, thank you for sharing your views. You just mentioned about ecosystem. So I would like to ask some of the viewpoints from other fellows over here. Branson, would you mind to share your views about the market in 2021, as well as your overview, as well as the outlook for 2022? You mind to share your views?
Sure. Thanks, Albert. Yeah. Thanks, Nick. So I think overall what we are seeing is, I think all of us agree that regulations have featured quite prominently over the past few months. I think case in point, Binance, FTX, both of which are very much into the tokenized security space, and then of course the regulators are pushing back very, very hard. I think that's going to be a so-called is going to be a prominent feature across the next few months as well. And to Nick's point earlier, but it's also good in the sense that I think the regulators recognize that this is a something to be dealt with, and therefore, sooner or later, licenses have to be granted and make it more regulated and more accessible to everyone. So I think going forward, that would be the main feature. Yeah.
Yeah, thanks, Branson. You just mentioned about the regulatory, risks as well as the regulation that emerged in the markets, right? I think we can explore more in the upcoming questions. So, Eric, okay, you mind to share your views regarding the Q4 2021? How do you think about, the market performance, the secondary markets for 2022?
I think from
Eric?
Yeah, so from HGX perspective, obviously, we got our MES license in June this year, and having being the first in Asia to be a members-driven exchange, we do see a surge of I'll call it deal flows. So things like the primary issuance and stuff like that across different I would say different asset class domains. So you have your luxury, your traditional equities, your fixed income and stuff. However said, we also are cognizant that secondary markets trading or secondary markets has a very huge dependency on the product type that is listed on the exchange. So for example, if you have a fund product that is going to be listed on the exchange and digitized, and with the nature of the fund having a daily redeemable structure, then the notion of secondary trading doesn't make sense anymore, because you can redeem it and buy into it as you want from as an investor, right? So, but having said that, we do see that I would say issuers who are looking to list it on exchanges would love to drive secondary market trading, right? And as such, for us as HG Exchange, we are actually building the ecosystem, like you mentioned, things like having designated market makers in place, whether they are from the proprietary trading world, who are very familiar with market making, or from the institutional side of market makers. Yeah, but that is just one, I call it one component of the ecosystem for secondary market trading. But yes, we do see a positive outlook for Q4 and actually moving further into the 2022 era.
Great. Okay. Well, first of all, congratulations for obtaining the license. And second thing is, we're talking about, market making is always a hot topic I want to explore. So later on in the upcoming questions, I would like to ask you further questions to see whether you can share some of your insights or input with other fellows in the market. All right. So now I move to the second questions. All right. I think everyone of you have been talking about liquidity. And every one of you are also talking about license exchange too. So would you mind, okay, Dr. Anthony Wong, okay, so talk about liquidity. What are the differences when comparing between license exchange against unlicensed exchange? I think this is one of the areas that you really feel interest to talk about. Would you mind you share your views to us? Dr. Anthony Wong?
Sure. Well, I believe from all license requirements over the world, say in Hong Kong or Singapore, they request for so-called professional investor or accredited investor to begin with. So they kind of restrict retail clients to participate in the license exchange. That would prohibit a lot of liquidity in the license exchange. Having said that, I believe given that the license exchange coming to the market and a lot of big institutions, asset management firm, in those days, they couldn't even open an account with a license exchange because the compliance would have well,
Yeah,
a lot
exactly.
of like reasons to stop them. While with license exchange, they will bring institutional money into the flow, and we hopefully that the global asset allocation will allocate a lot more portion into crypto virtual asset, and gradually I will expect to see in the coming years or so in the license exchange liquidity would be a lot more than unlicensed exchange, while license exchange will eventually allow retail clients to participate as well.
Yeah, I agree. It's always good to having transactions, marketings over regulatory. In a well-regulated environment. So definitely support your viewpoints. Eric, I quickly go back to you. You just mentioned you obtained the license. So please share with us your viewpoints, because I think you are in the right position to tell us what will be the changes, well, when comparing between license exchange against unlicensed exchanges, because you just obtained a license like June this year, right?
And I think probably Nick may also share the same views, given Nick's Gibraltar Stock Exchange is also licensed. And coincidentally, I was on a panel earlier this afternoon with FOW Asia, and one of and coincidentally, this question is very apt because Tower Research Capital, one of the panelists on my panel, he mentioned that when they trade onto a exchange, right, whether it's licensed or unlicensed, they have a preference that the exchange must have certain integrity, framework, structures, and safety nets, right? And that comes along with being licensed, because there's a huge, a whole laundry list of compliance matters that we need to address with the regulators. That inherently transcends to being having the integrity of the facility, your custodian, and the banks, right? So I think being licensed exchange, it does attract not just proprietary trading firms who are concerned about integrity of the marketplace, but it also addresses asset management firms who perhaps has a mandate that they have to deal with licensed counterparties. That includes venues, right? So I think to that extent, it does have a positive knock-on effect. However said, unlicensed exchanges, I would think, I wouldn't classify them as, okay, unlicensed exchange, I think eventually will evolve into being regulated to some extent. So case in point, MAS issued the digital payment token to digital currency exchanges. Well, could you say that is a market exchange license? Don't think so, right? But it's some form of regulatory that allows a framework to be able to say, okay, let's look at your AML issues or compliance issues, so that you have a marketplace that has the integrity. Yeah, so I think that's the way I would look at in terms of comparison. So to sum it up, license exchange liquidity comparison will be there. Unlicensed, I think it will also be there, but probably in a different framework that the regulators would come for. All right. Yeah.
Right. I totally agree, because you just mentioned the keywords, the integrity, and talking about market integrity. The major objectives, the prime objective is for the investor protections, right? Correct. Even though for some of the changes they are not being they have not obtained a license, still they're under the microscope of the regulator. I think you raised very good points. Nick, what do you think?
I think it's interesting. I think we said as early back as 17, 18, we clearly went too early, that we believe that clients of exchanges want to have that confidence and integrity and know that their assets are safe. Meanwhile, the unregulated exchanges have absolutely exploded and DeFi has taken off. So clearly, I was wrong. I think what regulators think about when they get out of bed in the morning is, are investors protected, and is the reputation of the jurisdiction or the country secure? And then thirdly, is there enough competition to provide consumers with choice? And I think what we've also seen this year, as we talked a little bit about earlier, is you're now starting to see action from the regulators. And the SEC came out this week to look at Uniswap. they came out yesterday about Coinbase, and all Coinbase are doing is doing something which everybody else is doing, right? And I think that's really, really interesting that regulators globally are now starting to say enough. Okay, we actually are incredibly nervous that these peer-to-peer marketplaces where people can effectively trade in mirror type of securities or products which look like securities where there isn't a prospectus. I think things are going to get very, very, very tough very quickly. That's really good for people like us who sit there and watch these markets explode and just think, really, we're having to deal with regulators and go through this 2-3 year process of getting licensed and trying to do everything correctly to look after investors and make sure that we provide a secure marketplace where issuers and investors can actually do business together who have been cleared. So I think that's the really powerful change that's coming. Regulators have finally started to take action, and that's been, in my view, such a long time coming. Having said that, why do consumers go to Uniswap? Because it's a great user experience, right? And so there's a real balance there, I think, where the regulators and regulated entities like all of us here need to also try to work our way through the user experience for clients to be onboarded, tries to become less and less painful, because people don't necessarily want to take 3 days and have their bank statements and source of wealth looked at. So I think we've got to comply with POCA and AML6 and all these great things that are coming out. But at the same time, we're in a market-driven economy, and consumers are telling us a message, right? If they can put 20 billion into Uniswap, there's clearly a demand there, right? So I think somehow there's that middle road where we've got to it's commerciality and control, and somehow the regulated entities, I think, need to adapt with their regulators to try to make the user experience more and more pleasurable, because at the moment it is a bit painful. But I think that's all positive, and all of these regulatory initiatives are great, because ultimately things are fantastic until the mess hits the proverbial, and then suddenly investors are saying, "Where's my money? Where am I protected?" It's like, well, actually, you're not protected. Your money is gone. Sorry. So I think that's again, you need several things in an ecosystem to develop in parallel for markets to mature. And I still think we're probably on the ground floor with digital securities markets in terms of that maturity, but the elevator's going to start taking off very, very quickly. So.
Yeah, I think if I may just jump into to add on to Nick's comment, I've also been asking the marketplace to say that if a product is listed on the digital exchange that's licensed, and obviously being licensed means the product is in accordance to whether it's the MAS SFA Act or the SFC Act in Hong Kong, could then the product be a bankable asset to the banks? Meaning to say, could I take that tokens that I bought and go to the banks and can you do an LTV on it, given it's listed on a regulated exchange and with all the guidelines of the regulation? So I think that's something that I'm looking forward to as part of the evolution, because it will be a game changer once those products on a digital listed exchange is able to be bankable.
Yeah, great, Eric. Well, I do agree, because there's some recent news talking about the nature of the products, and as well at the same time, talking about the risks over the AML and KYC areas too. I do think licensing is good things to have. It helps to make the market more regulated, not only to protect the investors, but also to protect the community as well. Because quite a lot of regulations are talking about AML, KYC, how to help the market become more healthy and transparent. All right, Branson, what are your views about comparing between licensed exchanges with unlicensed exchanges? What's your real points, Branson?
Yeah, I think Nick and Eric touched on most of the points, but I think the other sort of issue that I wanted to touch on is also the accessibility to the different types of investors. Right? I think most regulated exchanges right now, we can only work with accredited investors and professional investors in Hong Kong. I think that's something that obviously for regulated exchanges, we want to have a so-called piece of the action, right? Because the unregulated ones are basically anyone can just trade on those markets. So I think that's something that needs to be addressed. And of course, like what you said earlier, Albert, the consumer protection is important. The question is how do we get there, right? I think the balance have to be struck somewhere in terms of education and also understanding, what are they getting themselves into. Yeah.
Yeah, great. Thanks for sharing, Francis. Since we have a lot of areas talking about licensing and regulatory requirements, and what I can observe is during the past 3 quarters, we see that there are significant changes in the landscape of regulatory requirements across different regions, okay, particularly in APAC. Well, so tell me, what will be the implications on the secondary markets of asset tokenization or digitalization of securities in the short and long run? Dr. Anthony Wong, would you mind to be the first one to share your thoughts?
Oh, for sure. Basically, it just like what Nick mentioned. We finally see regulators coming to the picture. In the past few years, you see a lot of I would classify them as scammers. They issue like ICO, and then the whole project just simply gone overnight, and the project issuer going nowhere, and investor got no protection at all. Now it comes to under regulation. So people start to think that, well, we can really digitize some real assets, securities into a security token and put into under license exchange for trading. Then there's a good news to a lot of people, because in those days a lot of traditional securities and assets couldn't be easily trade, and lack of liquidity, you name it. The bond size is too big for retail investors, and or some of the assets you can't easily separate the ownership versus the income, something like that. But that kind of things can be easily resolved by tokenization using smart contracts. And the interesting thing, what we are seeing in the past years or so, is that first, now compared to old days, a lot of exchange voted for unlicensed, because it's easier for them to operate without any compliance costs, and they can issue whatever products they like, and grab huge market share, gain a lot of money. But while license or regulations coming over, eventually we will see all these things gradually slow down or even stop. And those liquidity or flow would come to license exchange, while with a lot of license to protect the investor. But at this point, I would also share with all the participants here is that technology always in front of regulations. So while we are seeing a lot of new innovative things like DeFi, NFT, that kind of things, that will also take some time for the regulators to understand and know how to regulate those things. While we running or operating license exchange, we have to learn, or like Nick mentioned, we have to align with this new technology as well to offer such product on our exchange to attract the investor to come to trade over license exchange, but not going to unlicensed or DeFi environment. That would be a huge challenge to all of us here in this panel.
Right. Okay. Thank you, Dr. Anthony Wong. Nick, Anthony just mentioned about your name. You might be the second one to share your viewpoints.
Yeah, I think it's a similar theme, isn't it? I think the regulators, I mean, as we talked about earlier, it's only positive the regulators are now starting to catch up. I think that's really important, and I think we've got to. You're absolutely right that technology is always going to be in front of regulations, but what we can't do is actually trade outside of those regulations, right? So we have to adapt our business models to make sure we stay within the CSD legislation if relevant, the regulations certainly in Europe, etc., or country by country in Asia, just to make sure that we are always complying. And I think to sit here and hope that the regulators are going to change the regulations, it's not going to happen anytime soon. So what we have to do is we have to take the regulations and say, okay, actually, what technically we're doing? What we're technically doing is we're changing the plumbing, right? We're changing the post-trade activity, because actually we're just in a matching engine, things happen off-chain. And then basically what we're doing is we're saying, okay, via the smart contract, we need to make sure that a register of members is maintained, et cetera, whatever that local legislation may determine. So all of that complexity is something that we have to, live and die by. But I think, you're absolutely right. I think as not illegal, as the venues that are currently touching into the securities perimeter illegally, they're going to get shut down very quickly. You saw the UK regulator FCA come out, I think last week, and say, we can't actually regulate finance. We can't actually regulate finance, which is, it's almost like, wow, what a statement from a regulator, right? Oh my God. So in fact, what we have to do is, right, you just have to say, okay, we're going in this direction, right? We believe that this is the future. And we believe that our duty is to ensure that we have a product that is appealing to issuers who want access to capital, investors who basically want access to some really cool things 24/7 on their phone on a Sunday. And we've got to have something really attractive to market participants, which is obviously part of this discussion, which is we need to be able to demonstrate that actually they can save money, their balance sheets are stronger, and there'll be no counterparty risk, and will reduce their failed trades and all that good stuff, and then incentivize them to bring liquidity onto the market. So all of those stakeholders, including the regulatory umbrella, is the minefield that we have to navigate, right? And I think the more that regulators clamp down, the better position, we and my colleagues on the this panel will look on the 5-year cycle. That's my view.
Thank you, Nick. Well, honestly speaking, from time to time when I'll be ruling, well, the regulations and rules over, imposed on exchanges sometimes, it's quite emerging, and it spent a lot of time for me to get an understanding of the prime objectives of those regulations and ensure that everything is properly complied or expected by the regulators. So sometimes I really pull out a lot of my hairs from my head. Oh, Branson. Branson?
Yep.
Yeah. Well, you're the youngest guy over here, and I see that you still have a thick hair. All right. So I think you have well addressed the problems quite well. Now, Branson, share your viewpoints to us. What do you think?
Yeah, I think, as I've said, I think regulations are definitely good for all of us who are playing by the rules. I think going forward, as evidenced by the pushback by the regulators against Binance, I think they are forcing, so-called these floating, unregulated exchanges with no jurisdictions and whatnot to play by their rules. In other words, you have to. It's like cutting them down in size, right? So every jurisdiction, you need to get a license, right? So I think that's one way to deal with it, because otherwise you have someone who is playing, arbitrage, jurisdictional arbitrage, which is quite difficult for the rest of us who are playing by the rules. So I think that's a prominent feature, and it is only good for the rest of us, because otherwise, we are just, the cost of compliance is there. We have an entire compliance team, day in, day out, we have to file reports and whatnot, and and there you go, another person just, their volume runs into billions and whatnot. So I think that's something to change, I would say, yeah.
Yeah, okay, great. Okay. It's always good. On one hand, I know a lot of technologies, financial technologies, they make a lot of money. So it's always good to keep the compliance and legal people to have the jobs. Actually, I have my compliance and legal backgrounds. I really want to keep my job. So, sometimes I really love what the regulators have done, and they impose regulations to the market. On one hand, it's a domestic productions. It's also the protection of the community. It also helps to, give me the job securities too. All right, because I'm an accountant and I come from the compliance fields. All right. Did I miss out anyone for these questions? Eric, do you want to share your viewpoints?
Yeah, if I may. As we all know, APAC is very fragmented, right? And the views of a certain country's regulator may be a bit different from the other. And being APAC, that's many different regulators of different views. But what I think it's good about, or the implication for the secondary markets, is that it forces certain countries to take a lead in terms of its robustness. So, for example, if I may use a case study for HG Exchange, We did the first launch, I think it's the first in Asia, a digitized listed whiskey-backed security, right? Never done before in this part of the world. But behind the scene, there were many structures that we had to put in place to basically conform or having to have the regulator being assured. Things like custodian, legal framework, who's a distillery, and all this stuff, right? And then finally, you have the framework. Then you do the easy part of digitization. Then you bring it for listing. So I think that forces the exchange to actually work with the regulator to say, hey, this is how we're going to do it, to conform to your SFA Act and with all the safety guards in place. And if they say yes, okay, from now, that would be our framework of how we actually bring other innovative products into the marketplace. Mm-hmm. Right. So I think that's something that we see is good. And yeah, it's positive in terms of the implication to the secondary market, because more products, innovative products or alternative products, we call it, can be brought for listing and into the secondary market trading.
Right. Okay. Thank you, Eric. Well, I think we have quite a lot of discussion over the licensing areas as well as regulatory risk or requirements. So I think some of the audience want to take away some things regarding what are actually going to be happening in the secondary market. So I think the rest of the questions we can explore more about, well, the market situations for the time being. So recently, there are many good news from the banking sector, such as State Street and JP Morgan. They inject a lot of resources and investment into the digital assets. And well, did you find your trading activity in your exchange increase due to this positive sentiment? Well, Eric, since you are here on the screen, why not you being the first one to answer with the questions over here? I do think a lot of our participants over here attending, well, I mean, the panels tonight is really wants to know more about what's going to happen in the secondary markets with those positive news, good news from different big boys. Well, I mean, the iBank or the custodian bank in the market. So what's your viewpoint, Eric?
A very apt question. In fact, HG Exchange is right smack into in engagement with some of these listed investment banks. Just to take a step back, because HGX is a membership-driven exchange, meaning we do have different types of licenses, right? So we have trading membership license, custodial membership license, and also listing membership license. As such, case in point, State Street, they formed their State Street digital arm. We are in discussion with them about looking at their custodial capability on the digital asset space. Case in point, you have, I was at SC Ventures, which is Standard Chartered Bank. They also invested into a digital custodian that is now FSA in a UK license. So these I would say specialized custodial firms actually do play a very good ecosystem part to the whole life cycle, because in order to attract large buy sites, for example, right, Tower Research or even asset management firm, they are probably saying, hey, how do I custodize my tokens? Is it safe to custodize with you, Mr. Exchange? Or is it safe to custodize with State Street? Okay, if it's State Street or Northern Trust, they have that heritage, good. It brings in that flow, right? It brings in that part of the buy side ecosystem. Then you have, talks about JP Morgan or even, let's say, UBS. If they, from a wealth management side of the fence, start to come in from a wealth management perspective, right, with these kind of reputable firms that is investing now into resource and investments into the digital asset space, it does benefit the exchanges around the world, right, to some extent. So I think that's my view of the positive sentiments that's coming up in the future.
Yeah, thank you, Eric. It's always good to have some market leaders being a key stakeholder supporting the ecosystems. All right. If that's, I came from State Street, I'm the SVP and the regional head of Asia Pacific over the governance areas. All right, Dr. Anthony Wong. So would you mind to share your viewpoints? Well, because there are so many good news from the banking sectors, how do you think about the sentiments in the market.
Sure,
Does it
sure.
really bring in some trading activities, increasing the trading activities in your exchange?
Sure. Basically, echo what Eric mentioned. I believe good thing is that we heard a lot of like good news and huge financial giants. They're participating in this market. I would still classify that we are still building the infrastructure for this virtual asset crypto kind of business, because in nowadays this kind of like huge organization, they simply refuse to participate, and especially banking market, whenever on the buy side, whenever they know that you trade crypto, they close your bank account. There was a huge like prohibitors from for people to participate in this market. While in the past years or so, you see this kind of bank, including like JP Morgan, they participate, they work with German 9, they provide bank accounts that facilitate a lot of like people to participate in this market. Having said that, I would say a lot of like these huge financial institutions, they are still finding their ways on how to participate or join this like party. While globally, the regulators only issued a limited amount of license to license exchange, so they don't really have a lot of choice to pick or choose their partnership, and they probably would not apply an exchange license on their own. They would choose a partnership with like HE Exchange with Singapore, Hong Kong Virtual Exchange in Hong Kong, Gibraltar Exchange with Nick, and ECXX with Benson. But for them, even I would say, as Eric mentioned before, regulators are a little bit different. Their rules and regulations are different globally as well. If eventually we can list a token in Hong Kong, doesn't really mean that we can list the same token in Singapore. Things like that. So for this global financial giants like JP Morgan, how can they provide consistent service to their clients? It is a huge challenge. Having said that, for the buy side, for new unlike retail client, the asset management firm, they also face a lot of like issue to resolve, like how to do the valuation of the token. They may not have the model to do the valuation to calculate their P&L and things like that. While I mentioned a lot of these things that we have to resolve, that's why we are still in the infrastructure building stage. But at least it's a good sign, meaning that globally regulators in the ecosystem, they are joining the party. The big financial institutions, they are joining the party, and a lot of people, they refuse or even ignore this as a class now, learn and try to participate. I believe that the main challenge for us in this panel is that, one, how can we work with different partners in this ecosystem to build up the right infrastructure and consistent standard globally? Second thing is, how can we as a semi-financial guy, semi-technical guy, to cope with the technology innovation all overnight? You can see a lot of new products, and how can we understand the technology details and bring it to the right way to be listed in a license exchange so people can enjoy the financial return listed on a license exchange. That's my view.
Yeah, thank you, Anthony. Well, you just mentioned about that. Well, there's some side. Well, JP Morgan, State Street, well, they're sizable financial institutions. If they can support a market, that's kind of big recognitions in the whole ecosystems. And talk about the ecosystem. You mentioned something very interesting to me. Well, you mentioned about the products to be listed or dual listed in different exchange. All right, this is something that I'm really expecting. I hope, well, all of you or top guys here in the exchange could one day find some solution to cross-listed your tokens in different exchanges. And I tell you, that will be a very big news.
Yeah,
very exciting news in the market, right? Okay.
You're spot on, Albert. We are also starting our brainstorming in terms of.
Let me join this brainstorming. Well, brainstorming club. I would like to join.
I'm more than happy to join as well.
Yeah, okay. I'll tell the group on that one, and yeah, include
Okay.
everyone. Yeah.
Well, too much Asian face on this club. Okay, let me ask Nick. Nick, what do you think? Well, we have, yeah.
I think this could be a great outcome out of this panel, right? Because we've all got our heads buried in trying to figure out how to navigate this landscape. And in fact, what we can do is actually all jump on a call after this panel and actually and swap ideas. You know, I think we've and there's really I think strong comments made there. I think Eric is absolutely right. Yeah, I think there's jurisdictional risk that a regulator can change their mind, right? Or a regulator can basically change the rules or backpedal or whatever. I think what we've tried to do in our model is to say, okay, and I think Anthony was absolutely right as well. The big investment banks have not yet figured out the real use cases within their organization, how blockchain can be developed. However, they are all using blockchain. And I worked for my sins in a huge investment bank for far too many years. And like my colleagues in other investment banks, we had 2,500 technology systems in one bank, none of which talked to each other. And it basically led to huge inefficiency. And you can work out what those inefficiencies could look like when you look at fixed income derivatives and equities, and then all of the back office and middle office, et cetera. I think those solutions can be delivered using blockchain technology. So I think a lot of that thinking is taking place. The confidence that will inspire the marketplace by having these big banks come, particularly to provide custody services, is what we all need. And I think that's going to lead to maturity. Do I see Morgan Stanley trading IBM as a token this year? No. But is it coming? Absolutely, yes. Because if we can say to Morgan Stanley, we can trade a PLC and wrap it and put it onto a marketplace, and you can trade for 10% of the life cycle costs that you're incurring at the moment, and you don't have to post capital with a clearer, and there won't be any failed trades. That could be pretty compelling when most investment banks are facing rising regulatory costs, as my colleagues have talked about, and normally margins being squeezed, right? So I think there's a huge use case for this innovation to be deployed. And I think the more and more involved that State Street and Boney and JP get involved, it's absolutely phenomenal in terms of that value added. I think the reason why we are taking as long as we have been taking is, as my colleagues know, you look at your matching engine, your surveillance, and your registry, and connectivity to blockchains, etc. You've got 2,500 corporate actions when you have an equity trading on your exchange, and as a central securities depository, you need to understand all that. I think it was Eric who said the tokenization bit is actually the easy bit. It's all of the stuff that happens behind that, where you've got to be able to make sure you comply with all those regulations. Where if I sell my shares to Anthony or Eric, they're the shareholder and I'm no longer the shareholder. That's the complex bit, and we need those big banks to provide a lot of that infrastructure. What we've tried to do within our model is, we think that the financial markets infrastructure is the heart, right? That's, if you like, the source of truth, and that's where everything really spins off. So if you've got multiple exchanges, you've got to be able to provide that infrastructure. And we don't know which blockchain is going to be the best. So actually, we're talking to as many blockchains as we can, because again, you can provide issuer choice. So you can say to an issuer, it doesn't matter what language your token is programmed in, we can trade it, we can settle it, we can basically make sure the register of members is updated. And that is an enormous undertaking, right? So I think what we'll see in the short term is really interesting whiskey-backed tokens, smaller issuers coming out with native tokens to raise equity or debt. But I think what we want to try to drive through in 2022 and 23 is to take the big publicly listed securities and wrap them, and that's where we can really start to. I don't want to segue into the next question, but that's where we can really start to, I think, drive on exchange liquidity in securities. Which I always say, if an issuer is a $10 million issue, tokenizing isn't going to make it liquid. It's still going to be illiquid. It just might be slightly more efficient to trade and settle, but actually it's still going to be illiquid. I think the real future lies in the changing the way the plumbing works in the current infrastructure globally, and that's I think the exciting opportunity. So and the banks are coming, and I think that's awesome.
In fact, if I just may share just 2 points, Nikki, I think you mentioned about infrastructure, and again earlier today, the panel and a different panel, we spoke about counterparty risk, right? And in our world, it's not the traditional counterparty risk we understand. It's about networks, counterparty risk, blockchain counterparty risk, and all this other digital nuances, which is the one that we're looking at. And second is about, you talk about a $10 million primary issuance. We are also very cognizant to say, you may have 10 million, but what's the minimum size of your token?
Yeah.
Which then translates to how many tokens do you tokenize? That creates the liquidity that you can drive in the secondary market. So yeah, so it's not like what it's not so straightforward, I would say. And I think that comes to the education to the marketplace, not only to the issuers, the investors, but also to the regulators.
Yeah. Okay. By the way, just to break up the conversation, I have a I don't know if you can see that, probably not. I have a Scottish whiskey mug with it doesn't have whiskey in it. By the way, it has coffee.
Lovely.
I'm Scottish, so don't think I'm
I got your hint.
raging alcoholic. Just in case you're seeing me, 2 o'clock in the afternoon.
Those do something from the custodian.
In fact, we were supposed to have a whiskey tasting with one of the new issuers coming up, but Singapore, because of COVID, there was a imposed a restriction again, so we had to cancel it. It was a bummer. Yeah, but anyway,
I'll do it for you this end. Don't worry. I'll test it in kind.
Thanks, Nick.
Okay. I'm looking forward to that. Some of your whiskey products, whiskey tokens can exchange across your exchange over different territories. Oh wait, Benson, are you here, Benson? Yeah. What do you think? Please share your views with us, Benson.
Yeah, so I think it drives two things, right? Number one is obviously giving more structure or shall I say the proper way of doing things, right? I think 4 or 5 years back, I think when we deal with tokens, I think we're still using those devices, right? And in fact, security tokens we used to store it on some of these ledger devices, and two-person keep separate passwords or whatnot. And then when you want to audit, it's extremely difficult, right? There's no way to download all the records and whatnot. I think things are moving very fast. I think there have been a lot more so-called enterprise grade custodial solutions out there, and obviously with investments from all these financial institutions, I think that will only bode well for the industry. That's number one. And the second thing is that it also sort of forces the different actors, or shall I say statutory boards, right? Because when we deal with security tokens, I think one of the key things that we have to deal with is actually the structuring of it. Right? I think when it comes to updating of the shareholders register, how do you do that? Right? Because if there are so many shareholders, will the ACRA be able to have so-called a proper record at any one point of time? Right? I think these are the things, and then and because of all these giants coming in, I think they'll be more than willing to sort of look at new ways of doing things. Right?
Yeah, so exactly. Yeah. All right. And well, I want to go to another question areas, which I do think is quite interesting information that we can share with the audience over here. So how to track the liquidity to license exchanges? For instance, well, City Capital ourselves is the shareholders of robo-advisors over digital access. All right. So from time to time, we try to help these firms look for the partnership with some exchanges, because for some of the exchanges, they provide incentive for high frequency tradings to increase the liquidity and trading volumes of exchange, right? So, Branson, since you are still on the screen, okay, would you mind be the first one to share your viewpoints? How to attract liquidity to license exchange?
Sure. I think it takes both sides, right? I think from the product point of view, I think there has to be more interesting products for some of this the buy side to come in, right? If you are just coming up with the same old, I think that's not going to do it. The other way to do it is not to steal Nick's thunder, is to wrap things around, right? Obviously your brand names like Google, Tesla and whatnot, those are what people are familiar with, right? Consumer goods and brands that people interact with on a daily basis, right? Of course, like innovative products like wine and whatnot. Those are the things that allow people to be interested in all this. So I think that is the buy side. And then on the other hand, obviously, how do you then make sure that there's also demand on the other side. So I think
Right.
all these things have to come together. Yeah.
Yes, totally agree. Okay, we always need to strike the balance between the buy side and sell side. And talking about high frequency tradings, do your exchange, for instance, do your exchange provide incentives to high frequency tradings activities, algo traders?
We typically work through some of our partners, and then one of the partners that we're working with is UOB Kay Hian. So effectively, we interact with them on an institutional basis, and then what they will do is then surface some of these products to their clients. Yeah,
Great.
So I think that's how we drive liquidity.
Okay, great. Okay, later on, introduce more these products to you. Okay, helping your exchange to increase the liquidity. All right.
Fantastic.
But I do need to mention one key point to mention. You talk about the asset class, the products. I think this is very key things that try to provide more spicy products to the market, because there are different kind of, buy side, they have different appetites, right? I do think you raised very good points. Dr. Angela Wong, so you might share your views about how do you think we can increase the liquidity to license exchanges?
Sure. Two things. I believe in old days, a lot of like ICO, they leverage market makers, especially for those tokens or coins. They don't really provide solid technology, solid ideas, solid ecosystem. Then they need very powerful, strong market makers to maintain their price. And at some point, for license exchange, it's somewhat similar. If the product is attractive, return is good, people would be there buying because they have underlying value, things like that. The second thing would be, now you can see a lot of like unlicensed exchange, they share the liquidity by using a so-called liquidity pool behind, meaning that they probably link up the first tier exchange with second and third tier exchange. So whenever there's a bid and offer, they can match up with another exchange at the back at some point. So that's why I flow the idea of how to list the same token into exchange like OS around the world. So giving the asset management hedge fund to have arbitraging opportunities. So they can buy from my exchange, sell in Eric's exchange, and buy from Brenson's exchange, sell in Nick's exchange, things like that. That would increase the global flow a lot. That would be two things that I can think of on how to enhance the overall liquidity on license exchange.
Right. Okay. So, Dr. Antonio, I'm sure you agree that not just risky products, we have to try to explore like champagne or red wine. They are good products, right? Okay. Nick, please share your viewpoints to us about how to increase the liquidity of the exchange and what you guys are doing in GSX.
Yeah, I think we've got to try and do a couple of things. I think number one is, our strategy is based around building a network of exchanges. So we currently have 4 or 5 on the go that we're in application, different stages of development. And part of that strategy is based around assuming the legal regulatory compliance boxes can be ticked, that you should be able to go in, place a buy order through an intermediary, and actually the algo finds the best offer on any of those markets. That I think is an interesting product for market participants. I think where we see the big opportunity, and when we talk about high frequency trading, which I see probably as the later stage of the maturity curve, if you like, is we need big PLC companies, such as the big wrappers, such as Google and Amazon, etc. And I think one of the big we see, if you like, an untapped oil mine is the oil field is securities borrowing and lending, right? So borrowing and lending today is very much a post-trade activity in traditional markets. That's why there's so many fails, right? So a client sells a stock and then the broker realizes the client hasn't got it, and so they have to go and borrow it, and it's like an after the event. And meanwhile, what's happening in DeFi is you've got this incredible innovation of borrowing and lending, where people are borrowing and lending to each other, and that's so. I think we've been partnering up with a DeFi firm. We want to try and reverse engineer that technology and innovation into a market, and I often use the example, my poor mother, she's 80 and she gets talked about by me too often, but she owns British Telecom shares, which she bought in 1984 when they went public in the UK. Those share certificates have sat there and done nothing for 40 years, and she gets a 3p a year dividend check that drops through her letterbox, and it's just madness. Now, she wouldn't know what borrowing and lending is, but what you could do is say to my mum, put your British Telecom shares into our account at the CSD. We will tokenize them and then just put them out on a borrowing and lending board on one of our exchanges to say, I will lend my BT shares at 4% a year. I don't even know what that means, but you know what? She can open an account. She can open an account with Binance this afternoon and blow her money on Bitcoin, and yet she can't buy Apple because it's freaking dangerous. I mean, it's completely mental, right? So, and my poor mum gets talked about this all the time. But I think if you can have a just-in-time liquid borrowing and lending board, that will give the HFTs what they need, where they can basically, as they press short, they'll basically be able to borrow and short. Until that liquidity and technology is in place, I don't see the HFTs having enough of a reason to come in. But if you think about the big market makers out there today in traditional securities markets, there is absolutely every incentive in place for them to join the digital securities markets, because the trade life cycle cost should be 70–80% lower, and that's really good for these guys. Okay, we've got to work out how compression, margin, leverage, clearing, and all that good stuff, because we don't have a clearing engine in our model. Our view is it's basically fully funded, so therefore you have to replicate the clearing the clearing functionality by having basically credit agreements between the market participants and their clients with fiat held in a central bank account somewhere. But you can replicate it by have T-instant settlement, and that's how you achieve, I believe, the huge efficiencies. And even though that will take time, that will bring liquidity on exchange and bring HFTs to the market. So it's all part of the maturing of the life cycle of where. And as I said, we're I think my colleagues agree. We're right at the beginning of building that infrastructure.
Yeah. Okay. Thank you, Nick. Well, I always find Eric always throw out some open questions to you. So be fair to you. That's why I put him to the last one for these questions. Eric, what's your viewpoint? Do you agree with Nick?
I think all three parties has mentioned a part of the building blocks. The reason why I say that is because I came from the sell side UBK before many years ago. Dealing with SGX, and I was on the technology front, on software providers providing technology to market makers and exchanges. So I see that almost the whole building block on an exchange. And to the question of how to build liquidity, it's a nightmare, or I would say nightmare. It's a huge challenge. But broadly speaking, I would say innovative structure has to be there, which means in terms of the products or how the exchange is being structured. Innovative products, which means that if the product, for example, Anthony mentioned about ICOs and stuff, if a product has economic substance, it would attract automatically people to trade into it, right?
Yeah. Okay.
And the last bit is, if you don't have technology in the exchange, how do you drive liquidity? So innovative technology has to be there. So three pillars amongst a whole behind, a whole nightmare of an ecosystem is innovative structure, product, and technology. These three broad pillars essentially will, I would say, set the landscape to attract liquidity. And these are not independent of each other. It has to go hand in hand.
Mm-hmm. Okay, agree. Well, you just mentioned about liquidity. Is always, related to infrastructures, products, okay, and technology, okay. I think it's quite related to my next questions. Since we are overrun, I would like you to be the first one, to explore these questions and give us some quick input. So what do you think? Will security tokens attract liquidity? Well, compared to utility tokens, do you think that security tokens have a bigger or higher liquidity than utility tokens?
I would say it would be equal for reason the following. Security tokens will attract certain kind of investors, right? Utility tokens, the same way.
Okay.
Yeah, so it's very hard to say which one can attract more.
Okay.
But from what I'm seeing in the marketplace now, there's a balance of, for example, family offices that wants to go into utility tokens.
Yeah. Okay.
But asset management firms who is looking for alphas, looking for what you call economic substance, are going for security tokens. So you have these two big domain of investors looking at different interests.
Yeah, agree. Okay, you're talking about the market behavior or the or customers' preferences. Well, I totally agree because different investors, they have different appetite.
Correct.
Okay, Dr. Anthony Wong, what's the viewpoint?
Well, I believe it is pretty similar. Although we saw, there's a lot of scammers on ICO, but there were quite a number of like excellent technology, IoT kind of token in the market. They still alive. They trade like very very high price right now. Maybe they 10 times higher price than when the time they issue. On security token, it doesn't really mean that it will eventually be really secure, because on classifying asset or securities, you can have a good company, you can have a shitty company, So it really depends on the underlying asset, where the asset security token is the underlier. And on utility token, it really depends on whether the utility is really valuable, innovative. So to me, again, it's very difficult to compare, utility token versus security token, whether either one of them will attract more liquidity. It really depends on the technology underlying.
Yeah. Right. Branson, what do you think?
I think in 2017, the ICO days, I think the funny thing is that every token tries not to be security tokens, although they are. so I think it's a misnomer, to be honest. I do feel that most of the utility tokens, to be honest, they are security tokens, right? No matter how you look at it. Because, people expect returns. They don't just buy into, I can use this token to get discounts on platforms or whatever. So I think most of the time you buy into certain tokens with expectation of returns, right? Whether it's, and then of course the projects will come back with, we're going to do buybacks and burn tokens and whatnot. Those are security features anyway, right? So to me, of course we try to segregate it, but at the end of the day, I would say that, at some stage, there will be a convergence, so to speak, right?
Right. Okay. Dick, what's your view?
Yeah, I think convergence is the right word. I think, if you start at the beginning, I think, if capital markets are 100x times crypto market, right? So if you're of the view that we are, that in the next decade, everything will be digital, then you can join the dots by saying the securities markets should be more liquid than the crypto markets in time. I think that's the sort of macro statement that I would make. I think secondly, there are people out there who actually want to trade everything in one place. I think you're absolutely right in terms of the institutional investors, but I think there are people who want to trade Apple at the same time as they trade BTC, right, in one venue, and there aren't many of those around, and that would be, I think, pretty interesting. So I see that convergence happening as a play. And I think the third thing is I actually also see that we call it the investment concept, where you have if you just think about British Airways has this thing called Avios points, and if you collect Avios points, what can you do with them? Buy a sandwich or book a flight. Now, if you think of the Avios point as a utility token, it's a reward mechanism. But imagine if you could actually press convert and convert into British Airways digital securities on exchange live. That's a pretty cool use concept. Now,
actually, you read my mind, Nick. I was just thinking about what if security and utility are fungible.
Yeah, because I think as long as, again, everything comes down to regulation, right? And regulation, legal compliance and eligibility, all those great things which you have to lose sleep over every bloody night. But if part of the, if you just think about the logistics of economics, if you can turn a customer into a shareholder, you basically bought loyalty, right?
Yeah.
And people buy Apple phones, and if you hold Apple stock, you're going to carry on buying Apple phones. But you know what? If you're a shareholder, you're a customer and investors. We call that an investor. And I think with technology that's coming with blockchain, I think what happens is with PLCs, they lose touch with who their shareholders are, right? And in fact, big data with on-chain CSD can actually bring that closer together. So you can say to anybody that has customers, you know, do you have a reward system? And if you don't, you should mint a token. Anyone can do that. And you should give your token holders the right once a week to convert into stock, for example. And it all happens on one exchange. And I think that would be really powerful because I think there's a big use case for that, assuming legally it can be done.
Yeah.
Right. Okay.
I do see utility tokens as not being over. I actually see them potentially making a bit of a comeback.
Right, right. I think everyone of you are excellent speakers today because they're sharing a lot of great inputs. But I'm really a bad moderator because I do not have a good time control over here because, well, we have been overrun. Okay. So to save me, all right, let's come to the last questions, which is, well, would you mind? Okay, Nick, you be the first one to help me to close this meeting. Okay, what is the one point you would like to recap or make over here before we close this meeting? What's the one point you'd like to share with us here?
I think the one point I'd like to close on is our view is that digital securities are now here, whereas I think 3-4 years ago, now when I say they're here, they haven't matured, but they're here to stay. And I think the T+2 model is going to work in parallel for 5 years, but gradually there will be convergence. And as we solve the infrastructure challenges, I think that they're here to stay. And I think the one message I would send is we have to stick with it. We have to be patient, and change is coming, and everything is going to flip over to a T-instant model in the next few years. That's my one message, and regulators get that, and we have to work with the regulators to execute. Right.
Okay. Branson, what's your view? What is the one point you would like to share with us as a recap?
I think exciting times. NFTs, the NFTs are here. The question is, how do you then, use it as a form of collateral and things like that? DeFi is driving a lot of the innovation, but I think overall this is very, very promising. Extremely excited about the future.
Yeah. Thank you. Eric, what do you think? What is your one point?
I would say market integrity is a big concern when it comes to digital. Having said that, if we learn the lessons of the Lehman crisis and others, I think the market integrity for the digital world is even more important.
Yeah. Okay. Great. Okay. And talking about market integrity, it's not just exchange matters. It's always a key factors that drive the whole engine in the tokenizations on securities market, because we work together with other stakeholders. Dr. Anthony Wong, what is the one point you would like to share with us?
Yeah, I believe from my point of view, I would like to see regulation and technology to get along, and even if not the same place, but in a similar place. So regulation would allow innovative products to be listed and traded in the market. From my point of view, like big data, it can potentially be an asset, right? Data is an asset. Can we tokenize data and put it as a token to be listed? And somewhat, how can regulation come online to get along, or how to regulate this kind of innovative product? That would be a challenge. But that we are living in an ever-changing world, so we should be good enough to handle this from now on.
Great. Okay. This time when I have topics about Red Chat, I invite you to be a panelist over here. Okay. All right. Okay. Well, thank you to every one of you. I mean, all the panelists tonight. Well, you really shared lots of great input. Well, talk straight to the point, is very open, just like all good friends over here. But you are, well, the top persons from different exchanges. So next time when you guys have some discussion, I put up my hands, open a group in Telegram, and let me join to share my viewpoints. All right. Let me see. Sandy, do we have any questions coming from the ground? Because we have been overrun. I can't see whether we have any questions come from the ground. If there's any, I think we can only answer those questions offline. Sandy, are you here?
don't think so. But that said, because we're a bit over time, I think we're going to start wrapping it up. Albert, you did a phenomenal job running the panel, and clearly there's a lot of chemistry in this group. So that is phenomenal. And for the attendees who have found this really helpful, feel free to share this with your colleagues, friends, and family. This recording will be up on the website a week from now, so you can find the recording there. That said, if you enjoyed this panel, feel free to go and sign up for the rest of our panels as well. You can do that online, just like how you found your way here. That said, thank you again to Albert and to each and every one of our panelists for making time today to come share your expertise. We hope to see the rest of you next time. And that said, good evening. I hope you have a great rest of the evening or morning, afternoon, wherever you are around the world. Thank you so much.
Wonderful. Thank you to every one of you. Okay,
everyone.
Really appreciate
Thanks, everyone.
See you.
Have a good day.
Now, Albert, good job. Well done. Thank you.
All right. Thanks. Thanks, everyone.
Thank you, Sandy.
Okay, thanks everyone. Okay.
Yeah, soon,
Good night. Okay, good day.